and welcome to another video. And this is not part 2 of the part video I made yesterday, but I will make that tomorrow. I guarantee you the rest of that will come back tomorrow, showing you about patterns. But before you use the patterns, you gotta know what you're using it on. So obviously you want to use it onto the candle charts and just the chart in general. You're just gonna use it there, but how do you use the charts? And that's what I'm gonna show you today. So just a little video so you can get used to what you're seeing, and we're gonna get into that right now. So let's go into TradingView, and that's where you should be. You can also go into Webull because Webull is free and you can't use the charts there, but the charts on TradingView are number one, best charts there is. And I know it's better than Webull, but I just trade on Webull. I don't trade on TradingView. You can trade on TradingView with Webull, but for me, I don't know. I just stick to Webull, and so I'm on Webull. And on TradingView, you can trade, but I don't. But TradingView is really good, and I recommend you to use it. And I'm going to show you how to use it and show you something very, very useful that you can use so you can grow your knowledge and your experience with trading, which is very, very important. So let's get on to TradingView right now. And here is TradingView. We're looking at Amazon at the moment, and you can see Amazon is at. I'm recording this at like 4 a.m. by the way, so that's why it's frozen. Oh yeah, there is different time frames. I'm gonna pop it up right now. That is the time frames for when you can trade. So pre-markets start from 4 a.m. and then open up to 9:30 a.m. That's before it officially opens. You can still trade, but some brokerages only allow you to trade to 9:30 to 4. But that's what we call pre-market. So that's when the market is open. But uh, you know, you some people trade it, some people there's in that time there's less people trading, so there's not going to be a lot of volume, and we all know what that means. So yeah, there's not going to be a lot of people trading it. And 9:30 to 4 p.m. is when the market is available for everyone. That is that's when it's open. There is like London session and Asian session, or sorry, session, and I will get into it as, but it's a little bit more complicated, so we're gonna get into that later on to the video. But yeah, 9:30 to 4 p.m. is where I trade. I trade actually to 9:30 to 10. You don't have to trade all day. I wouldn't recommend it, but if you're starting out, try to get onto the charts as much as you can, however long as you can. Yeah, but yeah, this is from 9:30 to 4 p.m. That's when almost everyone, billions of people are on the stock market. Maybe not millions, and hundreds of millions, because there's a lot of people. And then we have after hours, where it's 4 p.m. to 8 p.m. And that's when you can still trade, but like I said, some brokerages restrict it, and you can't really trade. But in some brokerages, you can trade from that time, and some people are still trading because they still want to trade or find their best time to trade is at that time. It's all different for people. It's a preference of what time you're good at, what time. If you can go in with the people that you if you can go in with there's a millions of people trading at the same time. That's how I trade, when there's millions and millions of people trading. But someone else might like to trade when there's like not as much as that. So, obviously you still need people to move the market, but they don't like it when it's moving fast. Because that's when I trade. I like when it's moving fast, so I can catch on to that fastness and be quick as well. Because I am a fast trader. But that's besides the point. We have Amazon, and we have different ticker symbols. So these symbols like help you find a stock. So let's look. We have Netflix, Tesla, Meta. We're gonna look at let's see. I'm trying to think of a company. We're gonna look at. Wow, I can't think of a company. Give me a second, one guys. Give me 1 second. Sorry. We're gonna look at Google. So we just search up Google. Am I spelling Google wrong? No. Okay, Google is just Goog. So we just search up Goog. Um, yeah, this is where you can find the stock easier. We're looking at Google. You can see pre-markets is on because it's 4 a.m. They open, so they're on, and you can see, yeah, pre, and it looks like on pre-market. So it closed right here at $167.75, and pre-market it opened high. So when it opens, it's gonna open at 168.50 if it stays at 168.50 right now. If it stays there, then it's gonna open at 9:30 at 168.50. But that's besides the point. Let me show you what's going on. We have time frames up here. So I'm looking at a 1 minute. So every candle right here is formed in a minute, and it's telling me that candle is telling me the information what happened in that minute. So and then it started up here, and we know about candles. I remember yesterday. Remember yesterday's video, guys. Opens up here, went down, and yeah, it closed lower. The price went down in that minute. It went down. Then in this green candle, it went up in that minute. We already know that. So we can look at the 5 minutes. So every candle represents 5 minutes of the stock. We can do that, and we can look 1 minute equals 5 minutes. So we take these candles, 1, 2, 3, 4, 5, right here, all the way down here. And if you look at the 5, yeah, see right here, all the way down here. It's a little switched, but you can kind of see like how it's similar, you know. But yeah, we have different time frames, and time frames are very useful, because everyone uses different time frames. Some people use the 30 minutes, some people use the 1 hour, some people use the daily, some people use the monthly. So if we go right here, every candle represents a month of the stock. But let's go back to the 1 minute because that's what I use. Yeah, everything's squished right now. Sorry about that. See that? Right here, these bars represent volume. So if I put my arrow right here on this candle, you can see right here, let's pay attention to that the volume was 12.31 thousand. You know, so that's, and then we go to this candle. Oh, something similar, 12.9 thousand. Yeah, it just means, and you can see right how it's similar. See right these two, 12.9, yeah, 12.3 if I'm correct. Yeah, see, that means 12,000 shares was used in this candle. If you understand, 12.9, but you know what I mean. So then we have that. We also have different lines on how you can use the chart. So if you don't like candles, you can use lines, but I think you should stick to lines. I mean, sorry, candles, because lines doesn't really tell you what happened in that exact time. Like, you know, it went down, but you can also know that, well, let's look right here actually. You can also know, if you look in the lines, it went up and down, but you don't know that it formed a wick. And actually, these wicks are very important. So if it went down and went back up, it's telling me that people who were shorting took hold, and then people who bought came right back and helped save it and brought it back up. But not back up enough because it's still red. But wicks, the whole body, not just the body, but the wicks are very important to the candle as well and to the chart. Then we have indicator meters. Like, you can find indicators. I recommend a lot of these indicators, like time and sales, volume, float, MACD, float, shares outstanding. Oh, these are very important. Remember, indicators help you. Oh yeah, we also have a different way, but this is way more complicated. Still useful, but way more complicated. So I don't use that, or won't get into that right now. Maybe in a later video I will. We have oh yeah, indicators. You can see it right here. VWAP. My Siri went. Sorry about that. And then we have these are all the drawing tools that you can use. So let's go back to our normal. Oh, let's say we just bought, right? We would put our we would put our stop loss. Remember, I taught you about this. Now there's a ratio to stop loss. So if I had a 2-to-1, I'm risking twice as much. So if it goes down and I lose and I take another trade and I win it, I am up. But if I lost the first one the second, if I lost 2 in a row and then lost the second one, I would be break even because it's 2-to-1. If it was 3-to-1, I would have to lose 3 and then 1-3, and then boom, I'm break even. And this is really beneficial. More, the more risk to reward ratio, the more higher your thing is. But the more reward you're risking, you're just risking a lot more risk. It's just more dangerous. So and most traders keep it to 2-to-1 ratio. They're risking twice as much, but they're making twice as much. So meaning they only have to win 2 trades to break even, to like not lose or win anything. They would just be 0 on a day. That's break even. So win 2 but lose 1. No wait, sorry, lose 2 but win 1, break even. I didn't win, but I didn't lose, but I didn't win, but I didn't also lose. So these are various tools. You can add text, blah blah blah. We have our metrics. We can use this. These help us form patterns. So if you see like a pattern, just call that. There's a head and shoulders pattern or an M pattern. You see that can be very useful. Let's check that out. We have RSI, if I'm not mistaken. Yep. Oh, am I mistaken for this? These are very complicated. I'm gonna show that. I'm gonna show you indicators in a whole nother video. Then we have lines. Everyone uses lines, and these help form patterns. And you should, of course, also use this. If you click this arrow right here, it shows you different kinds of lines. So you can have a horizontal or a trend angle or extended line info. So it tells me if I form a line, and it tells me the info inside that line. So it went down by 0.331%, 38 bars. It tells me the angle, the distance. Yeah, very useful actually. Yeah, if you click these arrows in each, it shows you more of what you can do. So if you see, let's say something very important or whatever, just put a circle, and you can even add a text. Oh, sorry, even add a text. Very useful. So get used to this, and the way you want to get used to it, is it's very simple. You're gonna want to go down. You're gonna want to see where it says trading. Let's log out. So let's start again. go to trading panel. Click trading panel. You're going to click paper trading. Connect it. You don't have to buy or do anything. And then boom, you have paper trading. This is just like a little fun thing I was just playing at, just because I was bored or whatever. Just, why not? Um, but but yeah, and this is where you can click trades. So, and if you don't know what to do next, if you want to buy trade, you can go out to settings, go to tradings. Oh yeah, one thing about the candles, they don't have to be red and blue, but red. Everyone knows, even as a baby, you learned that red equals bad and green equals good. But you can't change it, like black. But I'm gonna keep it a blue. I'm gonna keep it a green. But you can't change it. But I wouldn't recommend changing it. I mean, if you want to, if you change red to black, which can sometimes be useful, because if you see red, you're automatically gonna sell. But if you get out of that feeling and see black and be neutralized, unemotional, then that would be good. But I trained myself to not be emotional. But the thing about trading, you cannot be emotional. You have to be composed and focused. But back, oh, sorry, not serious. Back to where I was going to. Let's see. Let's go into trading, and you can add a percentage, how much you're winning by percentage, or tick or money. I keep it a money. Yeah, you can just edit this, you know, do what you want. And with this, if you click Shift T, you can then trade. And I recommend it starts you with 100,000 of fake money, so you can do whatever you want. Let's say I want to buy 1,000 shares, right? Remember, we have market limit stop. I'll use market 100 shares, or I want to buy 1,000 worth of shares. That's going to be 2,965 shares. That equals $1,000. Margin USD, or you can use balance, whatever. It doesn't matter. Even shows you right here. So my available balance is 900,000. But it starts you with 100,000. But I'm pretty sure you can edit that, but I never did. Explore, do whatever you want. That's why I'm recommending this to you, so you can get used to it. So once you get into the real, eventually, once you get into this real with real money, you're used to it. And that's very important. I buy. Obviously it was rejected because we're in a pre-market. I can't really buy in pre-market, but yeah, once it buys, it would show up. I'm gonna show you an example. Let's go to gold. I'm gonna have to find my order. Oh, there we go. It pops up like this. So if I wanted to, I would buy, right? And it shows up as a blue line with how much money I'm gaining or winning right here. So if I was losing $88,000, it would show up as a minus sign, 88 with red. But if I was buying, if I was winning, sorry, it would show up as plus, just like this. This is a buy, so I would use this right here, place it right here. So let's say a candle was formed right here. We can actually draw, if I can find it. Oh yeah, brush. Boop, beep, boop. Let's say a market, and I buy right there. Say I buy right there. Ooh, oh, I'm still drawing. I forgot. You gotta turn that off. So I'm still drawing. But let's say I buy right there. I hit my take profit. I exit out. Close position with this X. You can actually add a stop loss or take profit right here. Boom. Oh, and it just took me out. So I reached it, and yeah, whew, I did it. And let's go into a live market. So markets like these are always live, like gold. These are not stocks, but if I can remember correctly, futures. No, forex. Sorry. Forex and stocks are very different. Futures different as well. But let's place a trade. Let's say $300. Buy. I can place a stop loss or take profit. So once it reaches that take profit, it automatically closes it for me. And since this is a buy, we use this tool. I bought at this candle right there. Go all the way up right there. All the way up right there. And let's say we have like a 1-to-5 ratio. We can change it if we click on this. So let's do that. And now we have a 3.33 ratio. Yeah, that's how you do buy. And if you're confused, and it's very simple, if you want to do a sell, let's click Shift T. I will go right here and click sell. Let's go to market. So it sells me at that exact price. I sell. Now I'm betting on the market to go down, and I make money on it as it goes down. So I put a stop loss right here. So if it goes up and reaches this, I automatically lose that. But I'm gonna risk, like, I don't know, that much. That's probably like a 3 to 2 or 1 ratio. Just experiment, see some patterns. We'll exit out. See some patterns. See what's going on. You know, I use a pullback strategy. Oh, there we go, a pullback pattern. So you can see right here, perfect. This is like the perfect example on what I do. Let's go to brush. It goes up, comes a little bit back down, right here. Goes back up, and this is where I would enter. It goes up, probably exit out right here. It goes down, passes that line, goes back up. I buy over here, goes up, and sell out somewhere over there. And you know, but this is on the oh sorry, it's drawing a lot. But this is on the on forex, so it's different from trading. But you can still use this pattern for forex, but I recommend using it for stocks. It's way more better on stocks. My strategy consists of very different variables on how and when to use it. But yeah, that is essentially how to use this. Very simple. And if you don't understand some stuff, these are just like other things. You know, you can do communication hub. You can talk to other people, see the news. Very useful. But I just recommend going onto this TradingView.com and it's experiment. Start clicking everything and anything except let's log out except this. See, you can't connect to Webull. I started even. Don't click this because you have to click. Then you have to connect to a real account, and then your real money is used. And I don't recommend that. Use fake money, please. See if you're winning with fake money. If you're winning with fake money first, then start with real money, but not too much because fake money emotions is different from real money emotions. You're not risking real money with the fake money, so you're not scared as much. But if you know how to trade and you're gaining real money and you're gaining fake money, that also means you can gain real money. But your emotions are a key factor, and you have to know that. But yeah, besides that, click everything. We even have a strategy tester, load your strategy. We have replay trading. Replay. Some of these you have to pay for, and you'll see. But experiment. Start finding different stock. Let's say Apple. That was the wrong one. Let's just say APL. That's a ticket symbol for Apple. And yeah, look at all this. This is the stock for Apple. Just experiment. See what's going on. See what you can do. See what's fun. Do this for a calm 3 to 6 months. Get used to everything. Know what you're doing. That's the key thing. You got to know what you're doing because this is very, very important. I cannot stress this enough. Know what you're doing and just have fun with it. So it's fake money, so just have fun. And then once you have a strategy, and I'm going to teach you about patterns. So I recommend using the patterns I teach you in tomorrow's video. You can start applying and see what's working or what's not working. And, you know, yeah, you can then gain some experience, and experience is very important. So that's it for today's video. I'm going to end it right here on TradingView. Yeah, so experiment, see what you can do. You know, see what's fun. The trading is very fun, actually. If once you're starting out, it's very fun and exhilarating. So I hope you find that excitement as much as I did when I first started. I put this onto my friend, and he found fun with it, and he's taking it. I think he's taking it seriously as well. Shout out to him. I think he knows who he is. And yeah, that's it for today. Like, comment, subscribe. Check out for tomorrow's video. It's a continuation from yesterday's video. Very important, so I recommend watching it. And that's it for today. Bye.